Hi, good evening, everyone. It is my pleasure to welcome you all to this insightful webinar on decoding the Union Budget 2025 with our fund manager. The Union Budget is more than just numbers, it is a blueprint for our country's economic direction. It has certain effects on every individual industry and overall market sentiment. As an investor, understanding the nuances of budget can help you to make informed financial decisions. Today, we are privileged to have experts who will break down the key highlights, implication, and opportunity arising from this year's union budget. Before we begin, I would like to extend a warm welcome to our notable speaker, Mr. Nishit Master. He is an experienced professional in financial service industry, currently serving as fund manager at Axis Securities with close to 20 years of experience. He has built a robust career across various prestigious firms, including ING Investment Management, Kotak Mahindra Bank, and Motilal Oswal Financial Services. His expertise span both buy side and sell side research operation, providing him with a comprehensive understanding of market dynamics. Nishit is a highly experienced fund manager with a deep expertise in market trends and economic policies. With remarkable track record in fund management, he brings wealth of knowledge to help us navigate through the complexity of a union budget. Uh, we also encourage you to actively participate and drop your question in the chat box. That can help shape your investment strategy and financial decision. Whether you are an investor, financial professional, or are simply keen to understand how budget impact the economy, this session is designed for you. Without further ado, let's welcome Nishit Master to take us through the analysis on the budget.
Thank you
So,
so much. Thank you.
thank you so much for joining us and spending time from your very hectic schedule. Nishit, my first question is when we talk about union budget, right? As a retail investor, I'm always curious to know what are the key highlight of this year union budget that retail investor should be aware of.
Okay, so essentially, budget is nothing but the statement of intent of the government. One in terms of generating revenue through taxation. Now with GST coming in, the indirect taxes, most of the indirect taxes are decided by the GST committee, but the import duties and all on the indirect taxes are decided by the government. Direct taxation rules, both for individuals as well as corporates, are decided by the government in the budget. And then it's also a statement of intent by the government to decide which areas they want to spend on. So if you look at this year, it's been a slightly different year than what we've seen of late over the last 5-7 years. Over the last 5-7 capex being the major focus for this government. If you look at the spending, say post 2019 to 2025, the capex growth has been close to mid 20s percentage wise. This time around, that capex growth has come down a little bit. So if you look at actual budgeted estimates or revised estimates for 25 versus the budgeted estimates for 26, you will see a capex growth of say close to 10%. Uh, it's not as bad as 10% because there are a decent amount of areas where government has put in, there are areas where government has provided for giving, say, interest-free loans to state governments, 50-year interest-free loans to state governments, which will be used for, capacity creation or capex. So if one looks at, if you add all these projects together, then you're looking at close to 16-17% growth in capex, which is not bad, but it is not as high as what we've seen in the last 5 years, where we've seen more than 20, close to 25% kind of growth in capex. The other area where this budget was special is historically, and this is for the last 5 years. As I mentioned earlier, we've seen government focusing on capex. This time around, government has also focused on the stress which is there with consumers in India. and thereby provided the middle class with a tax break, which were unprecedented. So, anyone, generating 12 lakh rupees of income does not need to pay any tax in the new tax regime. If it's a salaried person, then, your tax-free income is close to 12.75 lakh rupees. Which is a huge impetus to the middle class, and it helps both in terms of savings as well as in terms of consumption for middle class individuals. So that again is one of the key areas where this budget was different. Apart from that, obviously, the government has done a few tinkering on various duty structures. They've corrected a few inverted duty structures, especially in the EMS space, which actually should benefit the EMS industry. It has done certain changes in labor intensive areas like leather, footwear, which actually should benefit footwear manufacturers in India. So there are certain industries which are clear winners from this budget. And I believe, if you ask me, the government has tried its best to balance out the stress which we were seeing, to elevate the stress we are seeing in the consumption side, and also continuous focus on capex. That's where the government has tried to strike a balance. And just bear in mind that this is on the COVID years. We were at 9.2% of fiscal deficit. From that to 4.4% fiscal deficit is a very big, huge journey which the government has undertaken. In fact, it's trying to curb the central government's borrowing as a percentage of GDP to less than 50% by 31, which again, you know, uh, roughly entails around 0.2% fiscal deficit reduction every year till 31. So again, that again helps out in terms of avoiding crowding out of borrowings, or crowding out of investments by the government, and it leaves enough money for businesses to thrive in India.
Oh, that's great. So, Nishit bhai, the way you said, like no earlier, our government was focused on the capex side spending. Now they have started, like no, they have started focusing on the. I guess by giving tax relief, are we expecting, or our government is expecting that we should move from we should also equally focus on the consumption economy,
Yes, so I completely agree with you. So if you look at a middle class family, and I'm talking of anyone, say, having an income of anywhere above 10 lakh to 20 lakh kind of a bracket. The savings from this budget is close to, the calculations will vary for each individual, income bracket, but they are close to 1 lakh rupees of savings. Now, for an individual who is earning 10, 15 lakh rupees of annual income, they for them, discretionary income, where you leave aside food, you leave aside rent. Discretionary income is say close to 2, 3, 4 lakh rupees. In that case, you add 1 lakh rupee to that, you're looking at say close to 25 to 35% higher income in their hand on the discretionary spend. So one, obviously, it leads to better demand for discretionary products. A part of this money can also be invested by these households. Now that can go either in equities, can go to banks as in the form of FDs, elevate some of the pain which Indian banking system is currently facing because of slower deposit growth. Just bear in mind that a decent amount of households in middle income households in India were under stress, and thereby, if you've seen banking results or NBFC results of late, there was a definite pressure on non-secured retail loans, where asset quality was getting impacted. Now, this 1 lakh rupee getting added, or even if it's 70,000 or 60,000 getting added to their income, should elevate some of the pain which was there, because now that income is available for that household to pay their EMIs. So that should also elevate some amount of pain which is there in the non-secured personal loan side. And if that gets elevated, then you will again start seeing banks lending more aggressively to retail borrowers on the unsecured side.
So the way you explained, how like no, now my second question is like no, uh, how does this budget impact the overall economic growth of India? Say the way you said, like no, people will have a higher disposable income. Will it lead to spending, or will it lead to saving, or will it impact any particular sector? Like, say, a lot of people are not having house, or if those who have taken houses, do you really feel like no, the additional income will be utilized for paying their EMI?
So see, this money which is available to the middle income or the middle class essentially will be used across the board. So it will be used for higher spending. Now that could be if a household does not own a two wheeler, a 70,000 rupees saving actually means that they can afford a two wheeler. Probably they can they'll have an EMI increase of 2,000 rupees a month if they want to buy a two wheeler, which could lead to higher two-wheeler demand, right? It can also lead to other discretionary spend. It could lead to higher FMCG spend or premiumization in FMCG. So that again is a area where companies can benefit. Then, as I said, that there was stress in the banking space, both in terms of non-secured retail lending. That stress can be elevated because that money is available, or part of that money could be used for deleveraging of household debt by these middle income families. Apart from that, some of this money would be saved. Now that savings can go to equity markets, can go to through SIPs, or can also go to banks in terms of FDs. Uh, and anyways, as I mentioned earlier, that Indian banking system is facing a problem in terms of raising enough FDs, which can then onward be lent to individuals. So that whole system could see some kind of improvement. Now, from the tax or from the finance minister's perspective, she clearly mentioned that the revenue foregone from these tax incidents is close to a lakh crores. And that lakh crores could be, that pie could be divided amongst the various initiatives which I or various spending or savings which I mentioned. I don't know how it will be divided, but it will go to these brackets ultimately, and that will have a repercussion on everything. So one, if you look at consumption increasing, that will lead to higher capacity utilization for players who are manufacturing these consumer goods. Higher capacity utilization means that they will need more capacity, which will then lead to an increase in private capex over a period of time. So, because of the multiplier effect, because of someone's consumption leading to greater capacity utilization, then leading to need for generating more capacity, and thereby ordering for machinery for taking care of that, actually leads to an entire chain, which leads to better economic growth for the economy.
So, this is, I don't know whether you'll be able to answer or not, but do you really think that by uh, waiving tax till 12 lakh rupees, will it increase the taxpayer count?
It should ideally. Historically, we've seen that government has whenever government has increased the threshold for taxation, it has led to more money coming into the formal economy. A lot of people who were earlier declaring, say, 7 lakh rupees as their income, especially small business owners, will now start declaring, say, 12 lakh rupees or 13 lakh rupees as their income. Though their tax outflow is not much, but see, when you declare that much as income, that money comes in the formal economy, and then the spending actually goes through the banking channel, which has a significantly higher multiplier effect than cash spending, because then cash leads to hoarding. But since it goes through the banking channel, the white income goes through the banking channel, it leads to the entire piece of that coming into the formal economy, which should ideally lead to greater compliance on tax, as well as a greater number of people filing for taxation. So, some of these people might not pay any tax, but it increases significantly. And that actually leads to a whole cycle of money flowing through the official channel, which is what all governments want.
Okay. So, the government has taken a couple of bold decisions in this union budget. Now, post budget, what all sector do you see that they are likely to be benefited in a big way, and there are probability where certain sector may not get the equal benefit, or maybe they'll face some bit of challenges in coming time. So, as an investor, we can definitely vouch for, or maybe we can take some information, or we should start tracking those sector closely.
Yeah. So see, net, as I mentioned earlier, that FMCG is an area which should see benefit from this budget. Two wheelers again is an area where where companies could benefit from this budget. Banks, NBFCs could be another segment which could see benefits accruing from this budget. On the flip side, as I mentioned, that capex growth is not as high as what it used to be in the last 5 years, though it's fairly decent. Um, uh, and in capex also, there are certain segments where the growth is not much. So if you look at railways, almost flat spending YOY. So there's no growth actually in railway spending. So some of these railway stocks which had gone up significantly, there was anyways a valuation, premium which was getting ascribed to it. Those stocks could see some correction. Yeah, where there was uh, uh, so. NHI spending, right? That's another area where you've not seen any growth. So company or construction companies, especially only doing road and a job for NHI, could see decent amount of or no growth this year. That again, is an area of concern. So these two spaces is where there is area of concern. While FMCG clearly, two wheelers clearly, banking, NBFCs clearly are beneficiaries for from the budget.
So, say post budget, how do you see stock market will react to this budget announcement in short time and long time, if long term purpose?
So see, two three things, right? In the short term, we've already had movements where uh, the sectors which I spoke about, saw decent amount of traction, especially on the budget day and the day later on. While infrastructure, capex driven companies saw a decline. So the short term movement has already happened. Now, the see ultimately markets will, for a longer period of time, markets will follow earnings. So we'll have to see in terms of execution of individual companies, how they execute from the initiatives taken by the government and thereby the boost in consumption which is expected, how that plays out and how each company benefits from it through their strategies, through their distribution, through their products, and keep a tab on them and then see, whoever is seeing stronger earnings growth will obviously do well in terms of stock market wealth creation for investors. While companies who don't see growth, who might see a degrowth, markets will punish those companies.
Okay. So the way now we have discussed that retail customer would be having more money in hand. So what impact will will the budget have on the mutual fund investment, especially in equity and debt funds?
So you could see some SIP increases happening because of that, and these would be the low ticket SIP increases, 2,000 rupees, 3,000 rupee kind of SIP increases, which an individual will do. So that possibility is there. Of late, what we've seen is because we've seen volatility in equity markets, and equity market investing is prone to volatility, right? It's not as equity as an asset class itself is volatile. So you will see these kind of volatility in between. So the volatility which we've seen of late or since last 6 months has actually led to some drop in net SIP inflows.
Okay.
Hopefully, this budget and the savings in hand of individual investors should lead to stability of this fall. Probably we could start seeing some kind of improvement in SIP flows. It will obviously be aided, or it could be aided by stability in equity markets, which we've seen of late. So that also should help over a period of time, stability in net inflows of SIPs. But yes, some amount of money can flow through SIPs by these retail investors.
Okay. So like a measurement which government has taken in this budget to address inflation concern?
So see, we are off the highways of inflation. So, anyways, now base over a period of time, will be our so it will be a tailwind for lower inflation. If in fact, if you look at today's monetary policy, also RBI has clearly mentioned that their target for next year in terms of inflation is 4.2%, which is okay for an economy like India. Second part is you look at there is really this higher demand should lead to higher inflation, but currently there is enough capacity in the Indian economy to cater to this higher demand which will be generated because of the tax cut. So I don't think so this tax cut will have any major inflationary impact because there is enough capacity available. Second, crude is fairly stable. In fact, so the range has been between $70 to $80. As long as this range is maintained, then that again should not lead to higher inflation. In fact, the new US administration policy is to actually pump in more crude. So over a period of time, you will see more crude being pumped out of US, which again should keep a cap on crude prices globally, which again is beneficial for a energy importer like India because if crude goes up significantly, then that leads to the first round of inflation, which is crude and energy dependent, but then the secondary round of inflation because everything your logistics cost for everything goes up. So that will be avoided because crude is currently under pressure or at least stable. And with the policy, the stated policy of the new US administration, where they want to pump in more crude globally, I don't foresee, unless until there's some geopolitical shock, I don't foresee crude going up. Very comforting from an Indian inflation perspective. So I think the major fears of inflation or concerns on inflation will now slowly start ebbing. So that's where we are.
Okay. Another point, which was really highlight, or maybe one of the good point to discuss here is in this budget, government has given some kind of support to MSME and startup. How do you see, this kind, this step can help the India economy grow, or maybe it will create more employment in the system?
So see, one underappreciated part of the Indian economy is MSME space. They provide significant amount of employment opportunities for a major part of population of India. Uh, so the government has taken a lot of steps, right? One, they've actually doubled uh, the amount, so from 5 crore to 10 crores. So that's the guarantee which the government provides on loans given to MSME, obviously on based on some charges. So that guarantee amount has actually doubled, which benefits MSME and starts getting them their ability to take in loans from the banks. So that increases that. Second, for startups, again, government has created a fund where so it's a fund of 10,000 crores that will provide equity to startups, especially startups being created by women and people from the underprivileged background. Uh, that again should lead to self-employment and small businesses coming up. Apart from that, in fact, just looking at MSMEs focusing on export, there are incentives given to MSME exporters. Again, on the lending side, the you know amount of money which government is securing by taking a charge, where then if there is a default, then the government pays to the bank. That has also increased for exporters. Apart from that, as I mentioned earlier, predominantly for leather and footwear, which is an area where MSMEs are actually very active and it's labor intensive. you are seeing decent amount of traction by lowering import duty on leather, and creating various other initiatives for that sector to grow. This should ideally lead to better job creation. In fact, if you look at the gig workers, or the Ola, Uber drivers, the Swiggy, Zomato drivers, or delivery guys, government has created mechanisms where they'll get health insurance, they'll have to register themselves. There are certain benefits which government is giving. System which the government is creating should ideally lead to better job creation and better standard of living for the population at the lower end of the strata.
Okay. One more question, Nishit, that is, say we have got, like, in this budget, do you really think that this budget will encourage domestic manufacturing and manufacturing in any ways?
So, government has focused on ease of doing business. Our rank has improved significantly. In fact, even this time around, a lot of TDS and TCS rules were modified so that there is less compliance burden on businesses. Apart from that, your revised, so you can also file your revised income. Earlier, that period was only 2 years. Now it's 4 years. So that again, improves ease of doing business. A lot of provisions in the income tax, which were earlier, criminal offense, have now been removed from being criminal offense. They are just financial offenses or civil offenses, not carrying any major, jail terms or anything. It's just penalties and all. So that again improves ease of doing business. So government is very supportive of the business. Their main focus has been on ease of doing business. Apart from that, as I said, historically, each year uh, government has been trying to correct inverted duty structures. Now, this time around, electronic manufacturing services or EMS space, government has done a lot of work on correcting inverted duty structure, which uh, the components to come in, but manufacturing to happen in India. So your finished product import duty will now be higher than the component import duty, so that the businesses are there is all the support for manufacturers to import components and manufacture the product in India and sell in India, rather than importing the entire product as it is and just sell it in India. This time around, but historically also government has corrected a lot of inverted duty structures, which ideally then leads to better ecosystem for manufacturing in India.
One last question from my side, and post that we will take a question from our audience. Last question: how do you rate this budget? And uh, second part of this question is, like, if you have to highlight two good things and one maybe a gray area or maybe little less popular thing, what it could be?
So see, according to me, this budget was a perfect, not a perfect, but at least close to perfect blend of balancing out what was required, which was support to consumers, seeing a slack in consumer spending. So by tax cuts, government has actually supported consumers, and obviously money is limited, right? So some money had to be cut. So the growth rate in capex has been cut, but it is still fairly decent. Uh, so I would not want to rate it, but I think it's close to what it ideally should have been. In terms of areas where we could have seen improvement, so railways and roads is where there is no growth. I believe for all manufacturers, logistics is a decent component of cost. If the government spends on railways and roads, and ideally, I thought that we could have seen growth over here. If the government could spend on that, then it actually lowers logistics costs for manufacturers as well as people moving in and out. So, I would have ideally wanted slightly more. more growth in railways and roads, where the spending this year has been flat. But I understand that money is limited. You also have to stick to your fiscal deficit targets, and the government has done actually a great job in terms of sticking to fiscal deficit targets. Um so that's why obviously there's been some, there's no growth in spending in railways and roads. But apart from that, I think this budget was a close to perfect balance in terms of what was required for the day.
Okay. Uh, Now I am done from my side, but there are certain questions from our audience. One question that, like, coming, Mr. Tejas is asking a question, sir. How does a broader market will do in coming times? Second question is, plus mid cap and small caps P is very high. How do you see this? And the third part of this question is, what's your take on contra strategy?
Okay. So, I believe that a major part of the pain is behind us. We've seen decent amount of correction in the last 6 months. Initially, it was driven by large caps, but last month and a half, we've seen small and mid caps also correcting significantly. Some of these small and mid caps have corrected more than 40-50% also. So, a lot of froth is actually out of the market, and that's why I believe that we are at the fag end of the correction, or we probably would have also, the correction would have been over. I don't know, but at least I believe that we are at least at the fag end of the correction. The worst case scenario. From our contra strategy perspective, so as you know, our contra strategy focuses on value and momentum as key attributes. Anything focusing on value and momentum will also invest in cyclicals. So it's slightly riskier strategy. Uh, but over a period of time, leave aside the short-term fluctuations which you see in market. But our belief is over a period of time, you will see decent amount of traction in contra strategy. We are actually very positive on the stocks we own in the contra strategy. Any improvement in the market, you will see significant amount of outperformance according to me. At least I expect significant amount of outperformance from the contra strategy. Going ahead.
There's one question coming from Jay. Is asking about, like, what are your views on marine fisheries and EV industry?
So, government has come out with various hopes on marine fisheries. The problem is, that government is doing what it can do in terms of, say, the feed costs. They're trying to get the feed costs down. They are also trying to get the best technology for marine fisheries to be adopted in India. But the thing is, it's a global market, and as long as Europe and US economy does not improve, and so does Japan, because Japan also is a fairly big market for Indian marine fisheries. As long as that demand does not improve, I think earnings for Indian marine fishery companies might not do as well. On the EV front, I believe there is an opportunity, but the adoption of EV in India will be slower than what people estimate. In fact, even in a developed market like Europe, which is a pro EV market, and I'm not talking of US, which is not that pro EV market, but Europe is a pro EV market. There is decent amount of pushback now on EVs. So, one, the stocks have run up. Anything to do with EVs, the stocks have run up significantly. And now with the Republican administration in US coming in, and they have never been very pro EV, uh, you will see the whole interest in EV coming down, at least for the foreseeable future. Thereby, I believe that some of these names could disappoint investors, because of the sheer multiples they are trading at, and so those multiples are saying that this industry will grow leaps and bounds, but I don't think so that will happen. It will be slow and steady growth. So there will be some disappointment. Uh, Personally, in our funds, we don't own any great EV stories right now.
So it was really indeed a very insightful answer. Another question coming from Ramesh Kumar. He wanted to know the taxation on the money earned from stock investing, particularly at STG and.
So see, there is no change in this budget, right? essentially short term. And again, I am not an expert in taxation, so I would still urge you to speak to your tax advisor. But short term tax rate is at 20%, long term is at 12.5%. Plus, obviously, whatever surcharges you are charged. But that's where we are. Now, at least this budget, there is no change on STCG and LTCG on equities. But again, I'm not a tax expert. You will need to speak to your tax advisor or your CA to get a better view on this.
Uh, the last question we are taking from the session is Pranjal, she wanted to know, should we continue doing SIP?
So the best time to increase SIP or start an SIP is when everyone is fearful. That's the case right now, right? People in the last 6 months have lost money. Markets have corrected. There is no frenzy, right? So earlier, every correction people used to want to invest in money. Now that's not the case, which means that there is fear in the street. Um, and if you ask me, equity is essentially for investors looking for long term investing. So, if you have a view of 3 to 5 years in terms of your investing strategy, right now is the best time to start new SIPs or increase your SIPs, and for sure continue your existing SIPs. Right, the worst time to stop SIP is when the market's correct, because then you are actually defeating the whole purpose of SIP. Because ideally SIP is beneficial because when the market's correct, for the same amount you'll get greater number of units, and once the markets come back, the wealth creation can be fairly high. Right, so in bad markets, it's the worst time to stop SIPs. Ideally, this is the best time to actually increase your SIPs.
If time permits, can we take one more
Sure,
question?
please.
There's a question from Parag Verma. He is asking, where do you see market in 6 months down the line?
So I am not an expert in terms of determining when markets will be in short term, and 6 months for me is short term. As I said, any equity investor, and I'm talking of investor, I'm not talking of traders. Any equity investor should have at least a period of 3 to 5 years in their mind when they're investing money in equities. And in that case, a realistic assumption from the market could be 12 to 14% kind of a CAGR returns. Now, that is what I believe companies can, the earnings growth of the index could be over the next few years. Because if you look at the nominal growth rate of the GDP, that would be around 11%. And because these companies are more efficient than the overall economy, you could add an efficiency percentage of 1 or 2%. So you are essentially looking at 12 to 14% kind of a growth on a CAGR basis over the next 3 to 5 years. In between, you could see some correction, you could see negative returns also. But over the next 3 to 5 years, I believe that it could be a fairly realistic assumption to get that 12 to 14% kind of returns.
Thank you so much, Nishit bhai, that you have taken time out from your busy schedule and helping our investor to understand the nuances of budget. And your insight will definitely help them to take informed decision. Thank you so much. It was indeed a pleasure talking with you, and we'll definitely have another round of session with you soon, where we will discuss about what is RBI policy, how it will impact, what kind of policy. Say, suppose today we have seen the rate cut. Still, market has didn't perform. So, what are the things as an investor we should be watching for, right?
So see, a minute I take you why the markets didn't go up in spite of the rate cut. So we are currently in a liquidity deficit scenario. In that scenario, a rate cut does not help because the transmission of that monetary policy will not happen as smoothly as what would have expected. Uh, a better a better thing would have been RBI providing liquidity rather than cutting rate, because then that leads to an ease of liquidity pressures in the market, and then the transmission could have been better. So that's why I think the market reacted the way they did. Uh, if there was a CRR cut, then I think the markets could have been more positive. Is my take on this.
Okay. Thank you so much. But we'll have a detailed session maybe in coming week. We'll and if guys, if you are really interested to go watch our insightful video, then do like and subscribe our channel.